Hopefully you guys are doing well. Today we're gonna do something I haven't done for a while. I did these like 1 or 2 years ago on stream, and every now and then I'll do them. But for the month, the next 30 days or so, we're gonna do these about 2 to 3 times a week, um, and it's gonna be a daily markup. So it's kind of like a daily review, but rather I'm gonna be marking up specific PD arrays and things that solve different problems. So the main point of this is number one, to build confidence in yourself for reading the market and understanding that there is some logic and similarities in each of the days, even though they may seem random or there's variance between them. Doing these markups are very beneficial in gaining trust in your system, gaining trust in your reading ability, and also gaining trust in trying new things like a turtle soup model or anything that you may find challenging. Seeing the things repeat day in and day out, Monday through Friday, despite the news, despite whatever it is, helps a lot. And if you don't already do this, I suggest doing these for the next 3 months if you can. Only takes, about 15 to 20 minutes once you're consistent with it. In the beginning, it may take 30 minutes, but I'm sure most people can spare 20 minutes out of the day. So I'm going to try and do these. I'm going to screenshot them and put them into a PDF. And then send that to the private group. So in the private group, I'll basically send these screenshots in a PDF format so you can kind of compare and contrast. If you're not in the private group, that's perfectly fine. Anyways, if you're in the group or not, I want you to mark these up on your chart as we go. And so if you're on your computer, pull up TradingView and we're going to mark these up together. If not, that's perfectly fine. But the main benefit is just kind of looking at the PD arrays and seeing them every single day. So these are going to be really helpful for anyone who's new or even intermediate, or even for myself. I like to do these, and I haven't for a while, but I think it's time that we get back into it, especially in the fall here when we have some decent price action. So we're going to start from the highest time frame down to the lower time frame, and I'm going to kind of break down exactly what I want to be looking for on each of those time frames, the reason behind them, and then eventually some entry models that are going to be there every day on the lower time frame. So normally I screenshot these and put these into Notion. You can put them in whatever. I think Notion's the easiest to just record data, but either way, it doesn't matter a whole lot. So I'm going to clean up this chart here and make it a little bit easier to see. I'm going to leave we'll leave this up for now. You can either start on the daily chart or the 4-hour chart, either one. I'm going to start on, we can start on the daily chart here, to be honest. But obviously we have the previous weekly high up here. Let's go back. We can start on the 4-hour. Let's start on the 4-hour. So a couple of things that I want to mark out. Obviously the weekly open, so I'm always going to mark that out. Monday, we don't really have a clear direction for the weekly profile, so I'm not going to include that, but rather just kind of building a framework from what we're seeing in here. So we have the daily inefficiency being dropped into, as well as the previous weekly high being used as a target. So the framework in this case that we can kind of build it on is obviously things that you want to be consistent. So I always will base my narrative and trades off of a couple of things called market truths, meaning if you're starting off on things that are always different and always consistent on some days and not consistent on others, there's going to be too much subjectivity in the marketplace. I want objective things that on any given range, meaning on any week, any day, any session, are all going to be there, right? So the things that are always true no matter what. So a couple of those is ERL to IRL. We know the market will always move in that kind of format. We know that MMXMs are all in there. We know the formation of the candle is also very important. We know that time is also very important. And you also, if you want to, you can throw in stages of price delivery. But these are always going to be the main things that you want to be building a framework on, otherwise known as like the foundation of the trade. So in this case, you could argue that on a higher time frame, and for the week, we're going to be looking from this higher time frame perspective of an open, low, high close, potentially manipulating the low of the week here. Even if it's wrong, it's not a huge deal. It's more of just what's the framework that we would use going into today. So on a daily chart and a 4-hour chart, we have, in this case, an IRL to ERL building. IRL inefficiency, ERL market liquidity, resting from the previous weekly high. Right, so you don't have to make it fancy or anything. I'm just going to mark out a couple of these pools here, and we can see kind of how it works. So just building it like this, and I'll take a screenshot here. And I'm going to post it. I'm going to open my Notion actually. Or actually, for the first one here, I'll just put it into the chat. So if you're interested, you can just grab these from the chat here. And obviously on a 4-hour chart or above, we're looking at this for a weekly perspective. So if I were to look at it from last week, for example, what can we say that we're doing in here? Well, we have the previous weekly high being used as the ERL, the inefficiency in the form of a daily imbalance using as the IRL. We have obviously the open, high, low, close for the week. And we also have the market maker sell model for the week. And we also have time. So meaning things like when these inefficiencies are being filled also should be forming during key times, right? Like news drivers and such. So since, like I said, since we do not have a weekly perspective building right now, or we don't have a weekly bias or anything or weekly framework yet, it's just loose. It's just building this. And as we go on from Tuesday, Wednesday, Thursday, Friday, we can narrow it down and get more precise with it. But this is the framework that we're building going into the day. So screenshot that, send it over. And now as we look into the daily perspective, we should be building a bias off of that as well. So we're going to start to mark out our important PD arrays here. We have the Wednesday daily inefficiency or daily buy side here. We also have an inefficiency on the 1-hour chart in here. And for those who are new, this may be quick, and the things that I'm explaining here are very specific, but those who have been here for a while, you'll see the benefit in understanding why to label such things. I also want you to mark out the midnight opening price. Sorry, the midnight, midnight time, I guess. You can see that in there. And I'm basing this off of the AM session movement. So what would be my bias going into the times that I want to trade? I'm also going to be using the framework for, the kill zones in terms of what's in the PDF. But more importantly, I'm just kind of framing a setup here on the daily profile in that perspective, not looking at the PM session as much, not looking at the lunch session as much, but just really what the AM session is going to offer. Where's the trade setup in the AM session, no matter what. All right, so I'm going to take off this new week opening gap because I don't find it as useful right now. We're looking at just the range here from midnight to the market close. And if you didn't see the morning session today, it was obviously bullish. So we're going to be framing it off of the fact that it's a bullish bias. So the importance of this is to go back in and obviously find the important data points, not to just mark it up just to mark it up, but rather if you were to see this day again, what would be the important data points that you can frame a bias on and frame a trade on before it's obviously unfolding. So going into midnight, what do we see? Do we see any sort of classic protraction profile or order flow, and more importantly, narrative going into the session? So we see that last week drops into the daily inefficiency. We have a run on stops on Friday, eventually displacement forming an inefficiency there. Continuous displacement and respect of bullish PD arrays, disrespect of swing highs and inefficiencies on this side, and eventually drawing up into the daily swing high from Wednesday and into further premium arrays. Right, so we're coming from discount, moving back into premium, using the previous weekly high as our draw on liquidity. And now we can look at the price action on the 1-hour chart that kind of confirms this bias. So on the 1-hour chart, we have an inefficiency here being dropped into during the London session. Remove this. We have the inefficiency up here in the form of a premium array. We also have during the New York session a run on stops here, which is going to be important later on. So more of just looking at how the AM session and the run up here offers a run up into a premium array. I'm not really as concerned with the run lower, but rather just this format here. So building a bias using PD arrays that we want to see over and over again. So there's not really a whole lot I'm marking up here, but just keeping the important stuff. So inefficiency, so a PD array being used during London session, target here, The run on stops going to the AM session, and then key times. So weekly open, midnight open, market close. All right, so this is what I'd be having for the daily screenshot. And the reason we're using the 1 hour chart is because that is the time frame paired chart to the daily chart. Meaning when we're looking at this entire structure here, when the day of Monday is forming the daily low to the daily high, it needs to be on a 1 hour chart or above. Okay, I'm not going to be using a 5-minute PD ray to frame the daily low. I'm going to be using a 1 hour chart or higher. So when I see here this inefficiency being used as the daily low, we're going to look for buy side liquidity or an inefficiency to be used as a daily high. Now, if I'm looking at the New York session, and I want you to zoom in here. If I'm looking at the New York session, and as soon as the New York session opens up and runs sell side liquidity, that is a form of what? Sell side is a form of what? ERL or IRL? Well, it's going to be sell side, ERL. What is the logic in this case that can be repeating day in and day out that we can use for a target? In this case, it would be premium IRL, right? So in this case, we're moving from ERL to IRL. It is counter bias a lot of times, but it's ERL to IRL. And from sell side, back up into a premium inefficiency, okay? So we can label this here and just leave these PD rays up on the chart just so we can see it. Screenshot that, and obviously put into our Notion. Now, as we get into the 15-minute chart, we're looking at the sessions. So as we go from the weekly on the 4 hour plus to the daily on the H1 to the session on the M15, we're only marking out the important key PD rays that would be useful going into our session if we were to see this again, right? So obviously we see the PD rays lining up on London session. It drops below the midnight opening price there, trades up, drops back down into the order block. Notice how I'm not marking out every single PD ray, right? I could if I wanted to. I can mark out how these PD rays are being held going to the session. I'm not going to be using, nor am I going to be marking this up going into my session, right? If I'm looking for a setup, more concerned with what is being offered prior to the 9:30, and also what should I be expecting to happen right at that open and eventually going into the session. So here I want to label key things like this case, we have the London low being formed here at 2 a.m. Okay, if you want to turn on different things, like different session indicators like this, that's perfectly fine. I'm going to do that actually just for this screenshot here, just so you can see a little bit better when we're profiling it. But 2 a.m. forming the low, and the buy side liquidity from Wednesday's daily high, and then premium inefficiency that you see up in there. So this is, you can classify this as our classic London protraction profile. Label this. I'm just going to put this on the screenshot here. So I suggest you do this as well when you're going back into your screenshots. But London open is making the low of the day. New York open is offering a retracement entry. London close is making the high of the day within that given range. Okay. Right, and if you know your key times, this is 2 to 5, 7 to 10, 10 to 12. All right, this is the way that I profile it. You're welcome to use something else, but in terms of the daily profiling that I use and the ones that I teach, I use 3. Swing to Z, classic London protraction, New York open reversal, and that'll fit 90% of all daily profiles, and it's very easy to see because then you can obviously try and trade classic London protraction and New York open reversals, and those are the easiest ones you can find low resistance moves in during the New York session. Okay, so I want to focus most of my attention on 9:30 to 10:30, 9:30 to 12, find an entry early on, get that move. If it happens to reverse going to the PM session, that's fine. I'm not trying to get a daily trade every single time, right? On a minimum, we are trying to capture day in and day out the session low to session high. That's what we're looking for in these kind of screenshots. So I can remove this just for the short term. But I also want to be marking out key PD rays that of our interest. So the sell side here, obviously going into the New York open session. Mark this out as sell side here. I'll actually just label this SSL so it's not as, there we go. Sell side liquidity. Mark out also our 9:30 open. Also mark out our noon All right, that's a key time. All things that we want to be seeing in here. So I'm not trying to keep it cluttered. I'm trying to keep it as simple as I can. And everything that I've marked out here is important for me. Okay, so London making the low inside of a 1 hour gap, respecting bullish PD array. We have the sell side going into the 9:30 open. As it drops for the session, we should see in here a 1 hour PD array. And since we're making the session low, we should see a 15-minute PD array being formed in here. And these are specific time frames. Okay, very specific time frames. So anytime I'm seeing the session low, it should be formed at the M15 or higher, the daily low, the H1 or higher. What also should you be seeing at this low and at this low that you can mark out? Preferably, you should be seeing SMT. So if you go on the 15-minute chart, and then we go approach the session going into 9:30. Where is our 9:30 time? Right in here. So either way, you could be marking out the SMT. Doesn't matter. From here to here. Definitely a lot of decoupling. So in this case, it's not vital that you have perfect SMT or anything, but what we would be seeing going into the session is YM and ES dropping further, much further than NASDAQ is going into the session. If you want to mark that out all the time, you can. It's not a huge deal, but I'm more interested in what's, seeing the eye. So you definitely can mark out SMT here between ES, forming the low during the session, running out the sell side, target and target. Okay, and remember the reason that we're targeting the IRL, the fair value gap here, and not the all-time highs is because we just came from, during the session, a run on sell stops. So we're going from a run on sell stops up to an IRL, ERL to IRL, right? So I'm going to screenshot this, put it into here. Now we're going to go to the 5-minute and start to break down the session. So let's go to the 5-minute. You can see I have the same exact stuff marked out here from today. Let's clean some of this up a little bit. So I got the 9:30 open, 10 o'clock, 10:30, 11 o'clock. You can see everything in here. So this would be our key PD array that we're looking to run on, see the run on stops. 15-minute sell side. Turtle soup, right? What else do we see on the 5-minute? We see a change in the state of delivery. And with the ATM model, that's kind of paramount for any sort of movement during the session. You want to see one of those if you get the low resistance run. Anything else that we see important? We see a 5-minute fair value gap here being used and offered right before the run up to our daily high. Anything else of interest and of value? I do see the fair value gap here being used as the balanced price range. Don't really have to mark that out if I don't want to. Obviously, I've marked out the low resistance sell side liquidity here. You can mark that out if you want to too, but we're keeping it simple and just overlaying the important information. I don't want to keep it cluttered because when I wake up in the morning, I don't want to have 50,000 things on my chart or things that I'm paying attention to. I just want the repeatable stuff. So I've done the work here in refining down exactly what I'm looking for. But if it's different for you, that's perfectly fine. I'm just using the things that I know are going to be there every day. So if we look at this tomorrow and we do a markup tomorrow, every single logical point that I'm putting out here is going to be the same. You're going to see a 15-minute run on stops or a 15-minute fair value gap. And then if it turns in, say it runs a fair value gap here, we're going to be targeting preferably some sort of bias of liquidity. This 5-minute SysD or shift or IFEG is also going to be there prior to the move higher. So all those things are very, very important. So we can screenshot this and put it in here. And I'm selectively just using the this all for a bullish example, because to me, the session, the New York session is bullish, right? You look at 11 o'clock and it's ending here. And then going into the rest of the London close and into lunch, sure, it drops into the London low. But when we're talking about, like I said, the New York open session, that range of time from 9:30 to 11 o'clock, it's bullish. So I'm framing everything in here as to what I would be looking for on a bias structure, higher time frame structure, lower time frame structure that validates that. On a 1-minute chart, this is where we start to mark out PD arrays and entries, because this is my entry time frame. So I'm going to be marking out everything that I want to see that is important. So in this case, key times and a ton of entry models are all going to present themselves. All right, so I have 9:30 marked out here. Obviously the macro time at the bottom that you all see. We have no news today, so 9:30, 10 o'clock are going to be very important. Just like how we have this 5-minute bisi, I'm also going to mark out every single PD rate that would be of interest if I were to tape read it again. So how would I read price if I was perfectly marking it up? It's a perfect markup. You're basically making the answer key as if you would want it. So I have a breakaway gap here. Why is this a breakaway gap? It's a leaving a balanced price range. So you have consolidation, drop down. Eventually it works inside these IFVGs and then it displaces away. First gap outside of the SMR. That is your breakaway gap. It's leaving a balanced price range, most likely going to be left unfilled. All right. You also want to be marking out things like the last manipulation leg on the 1-minute chart. So that's the last manipulation leg for the session. That gives you -2 to -2.5, lining up inside of that 1 hour IRL. You also see the -1 to -1.5 offering your silver bullet entry, right? And there's also different things that you could be marking up. So you have an IFVG in here that you could be using. All right, things you want to be anticipating going into the session. SMT, we have a change in the state of delivery in here. This is on the 5-minute, M5. This is on the 1-minute. You also want to be marking out key times. So this is especially helpful for those who want a time-based model. Marking out key times like this are extremely, extremely helpful. So 10:09 in here, 9:52. See in here, 10:04. Obviously, as I drop to lower time frames, you see it getting more and more refined. But when you're going to review this later on in the week, you're going to be going from a top-down structure. So obviously, I'm not starting on a 1-minute chart when I start my trading. I'm looking from a top-down structure and refining these PD rates as I go. So question, right? Obviously, different models in here. You have an IFEG model. You have a 1-minute SysD model. You have a 5-minute SysD model. You have breakaway gaps. You have macro entries. Tons of different things. Obviously, I could be marking out every single PD ray from low to high in here, but I'm just marking out the important ones that would be of interest. So the breakaway gap, fair value gap, bisi, IFEG, stuff like that. Obviously, the turtle soup in here, you could also be marking out. I want to make this a little bit thicker to see. And then also you could be doing stuff like projecting the last manipulation leg over here, and you get your -4 to -4.5 lining up with the sell side. That's extra, but this is what you'd be looking for, right? For the macro entries, where would you be the best places to put your stop loss? Would M1 SysD suffice? That's fine. In this case, if you use the macro entry here, so I want to talk about, obviously, the breakaway gap is not going to be filled in this case as it's part of a balanced price range. This is inefficient, right? This fair value gap is an inefficiency. I do not want you to understand or be in the misinterpretation of the PD rate to all of them to be filled, right? All fair value gaps are not all are inefficient. Fair value gap is a classification. Then you have BISIs, SIBIs, you have breakaway gaps, you have balanced price ranges, you have IFBGs, all these different things, right? So when we're talking about fair value gaps, this is exactly what you want to be doing to see it. Which ones are giving you entries, which ones aren't. This is inefficient, right? The 5-minute bisi as well as the 1-minute bisi are inefficient. Look at all of this range, all being, okay, if you got a bunch of orders in here, all of this is being offered. Now it leaves. This is inefficiency, right? Compared to something like in here, or if you were to see another one, especially if you saw one like right in here, that would be a fair value gap, but a breakaway gap. It's efficient delivery. It's not inefficient delivery. All right. So in this case, question is, if you were using the 952 entry or the 1004 entry before it ran up to the buy side, where would you place your stop? Preferably, if this is the fair value gap, at the fair value gap low here, or aggressively at this low. So either one would be something of interest, right? Stop loss below the entire fair value gap. If you want to go to the 5-minute or other charts, 2-minute you see that's below the fair value gap, 3-minute you see that's below the inefficiency, 4-minute as well, and then the 5-minute as well. It's all below there, right? So if you want to, you can be placing it there or below this candle. Either one would be fine. And then we also, if we want to, we can throw in a RR tool in a best case scenario. And show a possible trade idea from that range. All right. So this is how I would mark up. Let's actually make this a little bit of a different color here. Always show labels 11. Boom. Let's make that black. Text black. There we go. All right. So if we were to look at it like this, now we can start to see, okay, for the AM session between 9:30 and 10 o'clock, preferably if there's no news, what would you be using? Macro time. Could also use 9:30. Either one works. You have 9:30 entries, IFEG if that's your type, SysD if that's your type, 5-minute SysD if that's your type, fair value gap if that's your type. In this case, you have around a 4R trade, slightly higher, and you'd be targeting, in this case, the -2 to -2.5 lines up with our 1-hour IRL as we just came from ERL. Right? Now, you could mark out PD areas after that. That's perfectly fine. I mentioned the run down here if you want to, 1136, you can mark this out. Just in case if in further case studies you want to look at and provide yourself with more data, that's perfectly fine. And also, I guess you could also mark out the sell side run over here, but I want to try and zoom in as much as I can to gather as much data. So to me, this kind of just fits everything I'm looking for, right? And you can see if I screenshot this, and I actually will take that and add it to the list. If I were to mark out any other given day, and if you go back to 2020, 24 and 23, when we were doing markups like this is the same exact stuff that we were using years ago. Right? So all the PD arrays and things that I've marked out here are of interest to me. Where if I was tape rating this on the 1-minute or on the 5-minute, these are the things that I want to be seeing. And if I were to get an entry on today's price action, this is preferably best case scenario, right? We're making the answer key what I would be looking for. And then questions arise, right? So within the given static range, sure, 9:30 makes the low of the static range, right? 9:30 to 11 o'clock. 9:30 makes the low of that range, right? 9:29, but that's outside the static range. 10:09 makes the high. The app student will remember that preferably for any given expansion profile for the New York session, we want to see 9:30 to 10 make the low, and then what time to what time make the high. Why is that before? Right? So these questions should be popping up, right? As you're marking these out, how come this is different from my other examples? And you should be looking for the answer. If in this case, 10:30 is not the DOT, right? As we normally see, the opening range formed the low, 10:30 to 11 formed the high. There should be exit SMT. I'm not going to talk about that. But if 10:09 is the high, what was the DOT for this range? In this case, it would still be the London close, right? We know the London close to be 10 a.m. to 12 p.m. So it follows that. Why is it so early? Because we formed the low of the day during 2 a.m. Any guy in the PDF? Let's pull up the PDF really quick. Those who have it. I'm going to pull up and screenshot this. Even if you don't have the PDF, I guess this is a shameless plug, but I'm not really concerned with it as much. I just want to show you that this stuff is called for beforehand. Let's go to New York Session Guide V6. Let's go to the profiling chapter, which I think is chapter 5 or something. and go to the New York Open, the classic low net protraction profile, bullish. All right, so let's take a screenshot of this. I guess this is your little gem of the day for those who stayed behind. All right, in here, this is released obviously in December, but I want you to line up exactly how this lines up perfectly with what we're looking for. All right, so daily low form between 2 to 5, SMT, H1 or H4 discount array. Nice. Fair value gap preferably, or a run on stops, preferably during 8:30, 9:30, or 10 o'clock preferred. A 9:30 or 9:50 entry was preferred. And then a post 10 swing high. So 10 o'clock, 10:30, or before 12 o'clock, we're going to see the high of the day form inside of an H1 or an M15 PD array, ERL or IRL preferred. That's exactly what you get here. So post 10 o'clock, it's not 10:30 like you see a lot of times with the New York Open reversal profiles and when you're extremely bullish. But if we tag that PD array post 10, that meets the minimum requirements. All right, so look how it follows this perfectly. The SMT, the SMT, so it's decoupled assets, and I'm not going to get into that either, but you look at the SMT between here and here. Then between, let's go to ES, you have here and here. Either one would work. Obviously, you could use the London low too if you wanted to, because that's tagged on YM. But either way, SMT between swing lows, between the times of 9:30 and prior to the New York session. It doesn't have to be perfect all the time, but it's just something that you would be using to qualify the trade setup. And SMT is a confirmation. It's not always building it perfectly, but this is how you would mark up NQ for the day. You see that obviously ES and YM are different, but I'm not concerned with that. I'm concerned with making the answer key for the session. So what would be my bias? What would be trade setup? What would be all the PD areas that I'd be interested going into the session? So all of this meets those requirements. And you see that there's consistency, even though it's Monday. Obviously, given it's NFP week, we look to trade a Monday, but it follows the same exact stuff that you always want to see. So this helps build confidence, trust, and reliance on your model. And you see that the things that you're always looking for are always there. And there's no reason to rush a trade. There's no reason to force something that's outside of your model. And then also, I guess there's one thing I forgot, is also looking at the range given during the session. I do like to do this as well. So the entire given range of the session, just so if we're in screenshot, we don't have to come and count these over and over and over. So I'll screenshot this. I'm going to delete the other one. And then we put it in here. I feel like I was overanalyzing when I do markups. This makes it so simple. Yeah, this is what I'm doing. Like I said, when you get comfortable with it, it takes me like about 15, 10, 15 minutes. But in the beginning, you are concerned with every single PD rate. That's what I'm trying to say here is when you're doing a markup originally, you're concerned with every single PD rate that's printing and marking up and seeing that. Think about what's realistic. When you wake up in the morning, what are you going to be looking for to build a bias? That's the stuff I want to be marking up. Intermediate, right before 9:30 opens up, what are you looking for? Or at 9:30, what are you looking for? Right before 9:50, what are you looking for? At 9:50, where's your entry? If you trade 9:50, where's the targets? And then what happens as a result? So this fits everything, right? And you could go back to any of the days in the week last week, and it'll be the same exact thing. But this is what you want to be studying. So that's really it, right? And then you can, I would suggest storing this in Notion, like I said at the beginning of this, and then, I'm actively correcting any mistakes that I made in the morning session. So whether I took a win, took a loss, or didn't take a trade, I'm cementing this day into my memory. I'm creating the answer key and I'm studying the answer key. And this is like it, it's, if I were to have a test tomorrow, I would want to have preferably the problem sets from the previous day. You know, you want practice problem sets. You want the answer key from a given New York Open Reversals page. You don't want all the other data that was in the textbook that's not going to be on the exam. You want the stuff that's going to be on the exam, is always going to be there, and the stuff that you just have to memorize so then you can make, you can make money in this and be profitable. So you're building the answer key for yourself, and eventually, I'm telling you, if you have 3 months of data in this, you'll probably never look back, but you will be so much more confident and you will learn so much in these markups than you do in the actual session, because you're correcting mistakes and you're actually learning from what you should be learning from these sessions. Like I said, I'm not marking up the stuff over here. I'm not marking up over here. Am I trading that? No. Has nothing to, sure, I could learn all of that and try and back test it, but it's just a waste of my time, to be honest. This is what I'm concerned in. This is exactly the kind of price action that I'm trying to trade. And if I want to get the session move, here's a session move. Here's a session move. That's the trade. Does not mean that it's always going to be a day that you're trading. For example, Thursday, we're going to do a markup this week. It's the day before NFP. Am I going to be trading it? No. But I still want to show you that the model is still going to be there. The same exact stuff that you expect is going to be there. It's going to be very difficult, and that's why you don't trade it, because the stuff that you look for prior to the session is going to be very hard to read. And then even on the lower time frame session, you're going to see it all be stop runs and weird kind of stuff where you're like, okay, yeah, I can see that here's the entry, but I would have been stopped out, or this would have been very hard to read in real time, so might as well just skip it. But you'll learn that this is here 5 days a week, and you just need to get one of them. You just need to get one. You just need 2 R per week or 3 R per week, right? And you look at every single one of these trades, you're probably, if you're being very dialed in on where you enter and exit and put your stop loss, most of them are offering you 3 R per trade minimum. Most of them are probably around 5. As you see in here, it's around 4 or 5. And then you obviously get the logic as to why the stop loss is here, and why the take profit is here, and why the entry is there. Those are very important things that you may not be realizing you're picking up, but I promise you, if you do these, that counts as your lesson and your learning for the day. And then on Saturday, go back in and literally just scroll through, your Monday, Tuesday, Thursday, Friday, and you'll see how the weekly candle prints and how it plays in. And you're like, okay, now all these days make so much more sense, because now on Friday, I see exactly what the week was doing, right? You go back to last week, you go to the 1 hour chart and you look at how the last week printed, you're like, oh my gosh, I can see exactly what each of these days were doing. And if I had only known what the weekly profile was, each of the days I would have been able to find a trade, right? Monday's the manipulation, Tuesday, eventually leaving it and dropping down, form the gap for Wednesday. Wednesday's your continuation trade. Thursday's your continuation trade, meets the requirements for the weekly low. Friday just consolidates into seek and destroy because it's already completed that weekly bias. So learning from these, and obviously then what do you get? The ability to predict and anticipate, where on Sunday, if you do this for 3 months, you'll say, oh, actually, I've seen this kind of price action going into the week. I think it may be this weekly profile, and based on the news, this is going to be the day that it's going to form the low of the week. This is the day it's going to give me the continuation. And this is the day it's probably going to form the high of the week. And even if you're wrong, you still build on that. So if you want to improve in the craft, this is exactly how you do it. Okay. You may think I'm a technical wizard. I like to imagine I'm decently good at reading price action and trading. And I can dedicate or point to probably 70% of everything that I've seen and studied and learned is from this kind of markups, these kind of markups. I did this probably inconsistently, to be honest, for about 2 years. But I'm telling you, if you're struggling or if you want something to just spend time on, do these once a week. Do these for every day for 3 months, not once a week. Every day for 3 months, screenshot them, store them, review them on Saturday, and then on Sunday, plan ahead. So you have a problem set from Sunday, your anticipation, and then you're tape reading it. You're basically doing the exam in the morning if you decide to trade, and then you get your answer key at the end of the day. And you complete that day, and boom, now I know exactly what this Monday was doing, and this build helped me build a bias going into Tuesday. I guess the extra credit would be, how does this kind of price action play into tomorrow? I don't really do that. I probably should, but I'm more concerned with how the London session prints, so I can build a better bias going into tomorrow, So hopefully this makes sense. I'm going to scroll through and look at any questions that I missed. But I suggest that, like I said, hopefully you marked it up as we were going. If you didn't, that's okay. Take those screenshots and store them somewhere. And then the other markups that we do the rest of this week, I'm going to just provide those screenshots to the private group in a PDF format. And we'll go from there. Wait, Flux, could you go over how you would measure weekly projections, standard deviations using standard? Yeah, so if he's still in here, you have to use, so I would say go to the core content month 7 and watch the weekly short-term, I forget what it's called. I think it's short-term manipulation models or something. Weekly manipulation templates. Projections will be in there. That's going to just be the best in-depth video, to be honest. But you use slightly different stuff. It's more so yeah, I'm not going to get into it, to be honest. It's going to take a long time. Have you noticed that when 9:30 expands, 10 o'clock to 11 o'clock sometimes tend to chop, and then by 11 o'clock it moves aggressively? I've seen this happen a lot last couple of weeks. Yeah, it's based off of this kind of idea of it being a classic London protraction profile, but also just understanding how those daily highs and daily lows are being hit. All right, so what are your true daily targets or session targets? Think about the requirements for those and make sure that it's not just a random swing high, right? If I'm using a random swing high and random swing low, how do I know which one I'm going to use during the session? I need to have, okay, it's on this time frame, it meets this requirement, it's here, so then I know, okay, that's now I know that's a really good target as to why, like for example, this swing high would be our daily high. Your TP, you set it as an IRL because it's souped in ERL. Exactly. Yep. All right. ERL to IRL for the session. Obviously, you could be using the daily buy side here. That's perfectly fine, right? If someone was to take a SysD or IFEG here, you could take that. But yeah, the logic in this case is between the run-on stops here, distributing to an inefficiency here. Good question, though. But that's the things that are going to be repeating every day, right? Obviously, you could see on Wednesday daily high being formed in the gap. It's going to go for liquidity. All right, so that's all the questions I'm seeing. So that'll be it for today. All right, I've been going for about 40 minutes, so I don't want to make this too long. But obviously, if you got any questions, you let me know. And then we'll try and do another one of these between now and Wednesday, and then another one on Thursday, but probably 2-ish more for the week. And we're going to do these every single week and for the next 30 days. All right. So hopefully if you attend these, I'll try and make them around this same time, maybe slightly earlier, but you show up for these. This is kind of like just, reviewing the homework. And I promise you will see so much more confidence and success in your ability to trade if you just do this. It's very simple. It seems like a cheat code. It is. But yeah, hopefully you enjoyed. I'll post the recording up as usual on YouTube. And I'll talk to you guys very, very soon. Peace.